All right, guys, I do believe we're recording, but anywho, so we're gonna go ahead and we're gonna go over what we're looking for in the markets, how we're gonna look to get into them, maybe how we're gonna take the entries and how we're gonna manage each position from there. Now, let's start at the beginning. What's gonna be the best thing for me here? Let's let's blow this up here. There we go. So we got that blown up. Now we can just look at the charts. If we go into trading and we need to take a trade, then great, we will do so. But as of right now, I'm going to watch these charts, and if a trade sets up, we're going to take it. But in the meantime, we're going to go ahead and try to go over some of this detail and how we go about trading here. Let's start off with the basics here. The stuff you guys hear me say every day and the stuff we talk about all the time, the three checks. Pretty straightforward, but we're going to get into detail here. So we have the three checks are going to be Fibonacci's, moving averages, and support and resistance. Now, in order for me to take a trade, I must have 2 out of 3 minimum. Minimum of 2 out of 3 checks for all my trades. Must have a minimum of 2 out of 3 for all my 3 out of 3 is great, and we'll get that a lot. But we're willing to take these if we get 2 of these 3 as a minimum. So let's go ahead and start there. Now, let me blow up this smaller time frame, the 233 here, and we will go from here. So, for example, let's just start here with the basics. Let me zoom out here a little bit more. Start with the basics and what we're looking for. So, we want to see momentum. We have moving averages here on all our time frames, whether that be a 233 tick chart, a 5 or 15 minute chart, or a daily chart. We have these moving averages: 8, 21, 50, 100, and 200. The reason for these numbers, all the time I've been working with traders, these are the most commonly used. So that is what I chose. So these are all EMAs. So we're looking for momentum first. So with that, we have momentum here pushing to the upside. We want to look for an anchor leg, meaning a low to high, a nice clear push up, right? That is a pretty obvious anchor in the direction of the momentum. So we would take from the lows to the highs, and we're going to look for trading opportunities. Now, here's where a couple things are going to come into play. Whether we are with the momentum or we're looking at some type of reversals. Now, let's just first start off with the momentum. So, with the momentum, momentum's to the upside. Now, in this situation, we got momentum to the upside on a 233 tick chart, a 5-minute chart, a 15-minute chart. Everything, the momentum would be pushing to the upside here. So we're looking for 2 out of 3 checks minimum. So we have fibs, moving average, support, and resistance. So we have our anchor, low to high. Look for that. We draw our fibs. So here we're going to have the 38% fib and the 50 EMA. The same price. Right? Everybody can see that? That is a clear place to go ahead and look for an opportunity here. So with the momentum, we would look to put our first order there. First order there. Long. So with our new system, with the momentum, we're willing to put in another contract down here at the 50%. The next level. Does that make sense? The very next level. So we put in one order at the 38% and one order at the 50%. So that's 2 contracts if it decides to go against us. In this situation, you see it came down, filled our first order, and then just went ahead and took off. Our stop on this situation with the momentum's to the upside, would be below the next 618. Now, I'm going to go into more detail here on our different prices. So in this situation, we would get long at the 38 and the 50, a stop below the 61.8. Now, what if, let me delete this. Or actually, let me just find one. Let me just find one here. We didn't get a break here. We got a break here. I don't know if it's going to be one, but let's go ahead and just draw it in anyways. It's not. This is the same one. Came down to the 38% here at the low and then got the bounce. That's not one. I want to find one live, guys. What I'm trying to find is, all right, a pullback that's not 38%. I want to see a 50% pullback so I can show you. This one here would be the same situation. We're in the direction of the momentum here. We have the 38 and the 50 EMA, same price there. There's one order. Next order at 50, which is also this previous swing high. So we have an order there, a stop below 61.8%. That's your stop. This is the same as that last situation. What I'm trying to find is one that has 3 checks at the 50% level. So let me just keep on playing with this just a little bit here, guys. All right, here we go. Here we go. So on this situation here, we have, I'm just doing examples here, guys. So we have this previous swing high to low. As this market's pulling back, the 38% doesn't have support and resistance, and it doesn't have a moving average here. So we would not use the 38% in this situation. It doesn't have, it only has here fib, moving average, support and resistance. It only has fib. It doesn't have the other two. So the 38 is out. The 50% pullback has fib, 50%, and it has support and resistance, no moving average. So in this situation here, we are with the momentum right to the downside. So we would have an order at 50%, meaning the previous swing low. That's our original entry. With the momentum, we're looking for another order at the 61.8%. So here's the situation that we didn't go order at 38.50 and stop at 61.8. We went order at 50, order at 61.8, and our stop is going to go right up here above the 78. See the 78 up here? That is where our stop goes. So in this situation, we just basically moved our orders up. So rather than the 38, we're using our 3 checks, fib, moving average, support and resistance. Momentum is down, so we're with the momentum. So we go one order in at 50, one order in at 61.8. You know, the 61.8 did not get filled. It filled our first order and went right on to final targets. But in this situation, we got our first order off. Did not get filled, but it would have been right there, and a stop would have been right up here at the 78.6. Okay? Does that make sense, guys? Now, what are our targets on this situation? Targets on this situation are stop is always where it is. We kind of just went over that. Now, for a 1 contract fill, that is what we just talked about. Entering at the 50, we got filled, and it went on to sell off. So our second did not get filled here at 61.8. Did not get filled. So 1 contract, we're looking for this thing to start selling off. Final target, minus 23% fib. That's our final target. It's conservative because some will look for the 61.8. We're looking for the 23% extension target. So right here. That's your target. Now, there are circumstances where whenever it starts to trade lower, it gets down below the 8-period moving average, I will trail 50%. So as the market's pulling back, we get entered. As it starts to trade down, gets down below the 8-period EMA, close below the 8-period EMA, I will take my stop and I will lock in profits. So I would trail 50% of this move. So if it keeps on moving down, I'm going to move my stop 50% trail until it gets down to my final target, and we go ahead and get our target filled. So we're going to keep on locking in that profit with one contract until it gets down there. Now, the second situation here is, say this thing pushes down, pulls back. We have one fill here, and we have another fill here, and we have a stop up here. Okay, so say the market comes on down, it doesn't turn here at the first one, kind of like this one did. It goes up and it gets the next order filled. So on this situation here, our dollar cost is going to move up here. So this is our break-even point. We're with the momentum. First contract, I'm taking +5. Second contract, final target would be the -23%. Just like we've seen down here. Okay, so the first contract, remember this thing didn't turn at our original entry. So we put in, with the momentum, we put in one more. So we want to take off +5 to ensure that we're in a free trade, and then go ahead and let it run if it's wanting to. Can you set up this via toss share? I don't know what that means, Dave. Okay, does that make sense, guys? Where the stops are going, where the targets are going, and so on and so forth. Now, there are certain situations where we have reversal trading opportunities. Now, let me find situations such as that, and we will. Now, I'm throwing out a hypothetical here, guys, a complete hypothetical. But let me see if we can find something that would fit that category. Sorry if I'm jumping all over the place here, guys. See if I can find something that... Now, a hypothetical here. Okay, so say we have... Momentum is obviously pushing to the upside here. 5 minute, 15 minute, 233. All momentum is... Yeah, David, we'll talk about that here in just a little bit. I can definitely share my setup with you. But say we have some major daily resistance that comes through right up here, or maybe a 15-minute resistance, whatever it is. But we have anchor chart, major resistance up here. We came up, we failed. We came up again. We tested it one more time, and then we got a nice anchor leg to the downside, breaking the support. Say we had a nice little, we have resistance, we had the market test, and all of a sudden it tested again, and it decided to break to the downside. So in this situation here, as it's pulling back, we're going to look for some type of support or resistance. In this situation up here, we have this previous swing high, swing low. We could use either one of these as support or resistance. So let me touch base here. We're at resistance. We're wanting the market to roll down. But realistically, when we draw from the high to the low, the momentum isn't necessarily... Oh, sorry, guys. Let me redo that. The resistance isn't necessarily... there we go. All right, so the momentum is definitely to the upside still. So we're basically taking a counter trend trade here against the momentum. Remember, I'm only willing to average in to a position if we're going with the momentum, right? If we're not going with all the momentum, I'm going to only use one contract and accept a stop. One contract and accept a stop if it gets choppy. So with that being said, we're going to go up here and we're going to find fib, moving average, support, and resistance. So we have 38 here, which has moving average and Fibonacci. We have 50% here, which has nothing, just 50%, and 61.8 right here, which has support and resistance right there with it. So I will always accept support and resistance over moving averages. So in this situation here, we would wait for that support and resistance and the 61.8% fib, 61.8% fib. So now we're going in the direction of the opposite way of the momentum. So momentum's to the upside. We're hitting a resistance. Now I'm just drawing hypotheticals here, guys. Hitting resistance, and we want this market to roll over. So with that being said, we have support and resistance, and we have the 61.8% fib, 2 of the 3 checks right here. So what I'm trying to show here is the entry and not the scaling in. So in this situation here, we would enter right here with one contract. Just we're only doing just say one contract. It doesn't matter. You can trade 10 contracts, 5 contracts, 4 contracts. We're doing one contract here, but the idea here, we're not averaging in. Our stop is going to go above the 78%, and we're going to go ahead and get stopped. If the market decides to push higher, we're just going to put a stop. We're not going to put another order to average in. Does that make sense, guys? We will not put another order to average in unless we're with the anchor chart and the overall momentum. Okay? And the same thing applies here. Our targets will be 23, the minus 23% extension. Does that make sense, guys? Is that making sense? Was there something else we wanted to clarify when looking at this? I think there was, but let's see here. Yeah, right. Any other questions here, guys? Clear as mud. I love it. Okay. Any other questions here, guys? We can go into details of the stochastics and momentum and all that at another time, but I wanted to hit on what we're looking at with momentum, how we're looking to enter and how we're looking to exit, and when we're looking to average in, when we're looking to only use one contract and accept that next one as a stop, and what levels to put them at. Now, sometimes, it's pretty easy to explain because I have a really precise idea of what I'm trying to do with my check marks. It may not sink in after one time hearing it, but after a couple times, I think it really is a very self-explanatory set of rules. So fibs is always my number one that I'm looking, number one check. Support and resistance is always my number 2 check. And moving averages is always my number 3 check. Now, if you can get all of them, great. Now, sometimes you won't get support and resistance because you'll have something like a move like this. And now you can only get like a fib, like a 38% fib and like a 21 EMA. Now that's just part of it. You got to accept the 2 checks. But if you ever have a situation where you have, say you have a 61.8% fib and a support and resistance, or you have a 38% fib and you have a 21 EMA, now this depends. If you're with the momentum, you can enter at the 38%, average in at the 50, and stop above the 61.8 because you're looking for it to turn it to 61.8. That's support and resistance, right? Your stop can go above it. But if you're counter trend, right, say the momentum is technically to the upside, but we have some resistance here. I'm sorry I'm getting a lot of chicken scratch on here. But if we're counter trend and we're looking for the market to reverse, and you have the choice of 38 and 61.8, I will not be entering at the 38% here with this moving average. I'll wait and put my one order up here at the 61.8 because that is the likely turning point, and my stop will go at the 78%. Now, did I lose anybody there? Because I want to be really, really, really clear on this, because this is going to be the difference between being confused whenever I'm in a live trade and being not confused. This is right there. I pretty well have written it out, and I'm very, very clear. It is 100% risk management. You want to know how to manage my risk, or are you just saying this is risk management, David? You want to know how to manage the risk. Okay. Yes. Oh, you say this is risk management. Okay. But yeah, I'm going to explain in case somebody else didn't get it, David. You made a good point. Even though I know you got it, I'm going to explain here. So the first situation, we're with the momentum. So we're going to enter on the 38% and say the market comes up to test the 61.8. We'll be in at 2 contracts. So I will take off at plus 5 for one contract and then minus 23% for the next. If we, on the second situation where the market was actually pushing up, momentum is pushing up, and we're only entering one contract here at the 38% or the 61.8%, what I'm going to do is I'm going to put a stop up here at the 78, and if we get close below the 8 EMA, I'm going to trail at 50% with my target at the minus 23% extension level. Does that make sense, guys? I want to make sure we're very clear. It's the same thing. I did another example where I drew it out. You got it. You just need to do it more. Very good. I'm always going to use a fib. That's a good question. Do fibs supersede support and resistance? I'm always going to use fibs simply because the answer is no. All right, let me explain that. The answer is no, and there's a lot of gray there, and I don't like gray, so I'm going to explain this. The answer is no. Support and resistance, price is always king, no matter what. Price is always king. But the reason I put fib above there is because I'm going to use fibs to find my targets. I'm going to use fibs to find my targets. So I put them just as high. If you've noticed, a lot, if not every one of my trades in this trading room come at a fib level. So it's very rare for me to, since I'm a pullback trader, it's very rare for me to take for me to take an order and not be at a fib level. In your opinion, fibs are support and resistance? Okay, I understand there, David. So that's a really great question, and I want to hit on that. But for sure, the moving averages are always third in the list because they are something that people can change. People can always use different levels for fibs and whatnot, but the main ones are the ones we're using, 38, 50, and 61.8, and I think they're the most common, so that's the reason I do that. So the fibs are very high up on my priority list simply because that's how I find a lot of my targets. Okay? Very good. I appreciate the nice words. Any other questions here, guys, about this topic and how we're going to find these entries, and not only find them, but as I say all the time, anybody can have a strategy. There would be 1,000 traders out there. There's going to be 1,000 different trading strategies. You need to learn risk management and what you're comfortable with. Now, what I just showed you is what I am comfortable with. Now, you're welcome to use a variation of that, but this is what I am comfortable doing with it. Now, you may want to go all in, all out. You may want to manage it more than me. You may have a different way of doing it than me, but this is how I am going to be doing this. So, like I always say, there's a million strategies out there. It's not the strategy that makes you a profitable trader, and not only that, a consistent trader. It comes down to risk management and how you're able to manage your risk and how you're able to manage your positions. That is what makes you take the next step. Do I ever use 38% versus 61 on entries for counter trade? Yes, 100%. The reason we used 61.8 was because the 61.8 and the support and resistance were in alignment on our example just now. If we have a momentum to the upside and we have resistance up here that we hit, and say we have something like this and all of a sudden it pops down and the 38 comes in line, say this is the 38% pullback, that will be my entry at the support or resistance. Our example just happened to show 61.8 on the last one. But yes, if you pull back and the 38% is what is at support and resistance, that will be your entry. Good question. Thanks for hitting that up. No problem. Thanks for saying that. But that is my entry. And we've went over the management here a couple times. So, all right, any more questions here, guys? Any more questions here at all? We're looking right now at an example here. Let me go ahead and stay live here, and maybe we can pull out a trade here. But what we have here is we have resistance that is held, right? We've had resistance that's held. We have the daily resistance here. The market's rolling over here, starting to roll over. We just broke this most recent support. As this thing's pulling back, what are we going to look for? We're going to look for a possible reversal opportunity with the, yeah, good comment. We could look for a possible reversal opportunity as this thing came up and approached these 55 halves. Does that make sense, guys? As this thing came up and approached these 55 halves, we can start looking for possible reversal opportunities. Let me just go ahead and draw here for us if they come in alignment here. So we have the 55 half would be the previous swing low. Let me blow this up here, guys. We're looking for these 55 halves. Let me get a stop out there. So we have 55 half is going to be an entry, and I'm going to put my stop up here at the 56 half. Actually, we can do a stop at 56.2 and be just fine. So we don't need to risk all this. We can leave a much smaller stop if we'd like. So 55 half and 56.2 is our stop. So that'll be good. We can get these examples, and we can get maybe a recorded trade here on this same video. And I will get this posted to the site, guys. What we have here is we have counter trend because momentum is to the upside, guys. Momentum is to the upside, so we're only doing one contract. Now, we're willing to accept a stop. We're not going to average in. We're just going to accept a stop, and we're going to go on our merry way here. But let me move that up one more tick, guys. I'm willing to risk one more tick here. I don't want to be a tick above. I want to give it 2 ticks. But anyways, beside the point. So we have fib, support and resistance, and moving average. We have Fibonacci, 38%. We have moving support and resistance. We have this previous swing low here, support and resistance. And we have moving average. Here we had the 50 EMA. Let's see if we can get this thing to go ahead and start dropping here, guys. Yes, on this situation, we're willing to accept the loss. We're not averaging in because we're counter trend, guys. We have to just go ahead and get this thing trading back to the downside here. We're not willing to average in. Just accept a loss if it goes against us, and we'll move on. Yes, counter trend will be much more aggressive. Always, always, always more aggressive. So once this thing starts trading in our direction, we will lock in some profits. Final targets down here at the 54s. Final target down at the 54s. If this thing can start dropping. If it's not going to drop, then we're running the risk of a stop here. We've came as high as a 55.8. Starting to get a little bit of a drop here. All right, that's enough of a drop for me. I'm going to go ahead and lock in a free trade here. I've now taken my free trade back to the 55 halves. We will always manage these a little bit tighter, guys. We've dropped over 50% here from these highs. I'm going to manage here. I got the 55 halves as my break even. Let's see. It's either going to keep on pushing, or we're going to go ahead and take a free trade. Yep, using that 55% trail. Yep, remember 58s was our high. We came as low here as the 50s. We're locking them in. Locking in some more here. Locking in some more. We're counter trend, so it's a little more aggressive. It's something we just want to manage a little bit tighter than we would if we were with the momentum. With the momentum, we give it a little bit of time to push on up. Now that we're counter trend, we want to go ahead and lock in. Anytime we can make some profits, we'll go ahead and lock in them profits. So This is just one contract. Now, it doesn't matter if you do one contract. Lock in more, guys. We dropped again. Lock in more. We're down retesting the lows here. So we're just as likely to reverse back to the upside as we are to continue on down. We're retesting the lows here. So we'll make sure you lock in some more profits here. We're just as likely to reverse here at these lows, as we say double bottom here, as we are to continue. Trade taking just a little bit of time. We're getting closer to that 10:30 hour here, Central Standard Time. Lunch really starts to slow things down just a little bit. Lunch starts to slow things down just a little bit. So it's a little bit slower than we would typically like, but we still manage it exactly the same. We still manage it exactly the same. All right, and let me cancel this other order, guys. We are out. This thing may just keep on dropping. It may reverse right back to the upside. What we did was manage our risk. We did not allow ourselves to have 10, 20 ticks of profit and let it give it right back up, because it's just as likely to reverse to the upside right now as it is to go ahead and continue dropping. So that is it's kind of nice. We just went over all that, and we were able to actually get a counter trend, which is an even tougher trade to manage and take. But we got a counter trend trade on this little recording, so that worked out nice. So yeah, that worked out pretty well, guys. So good deal. So we end up managing it properly, and we'll go ahead and we'll keep on looking for our next opportunity. But any more questions here about this particular trade setup and how we're looking to manage these trades? Any questions at all, guys?